Hello, everyone. Tim Davis coming to you guys with another weekend market review. And I'm going to start off a little bit differently right now. And I want to start off by showing some folks what the longer term charts look like to help you to look at the bigger picture. And for those looking at a longer term outlook, not to so much focus on the day-to-day action, especially with these rallies that we are seeing of folks. Some folks have been confused whether or not we're in a new bull market or not. So let me show you guys what the longer term charts are showing us. Normally, when you start to see major shifts in the way the market is running, you need to really pay attention to the longer term charts because it can spell out everything for you, and everything that's happening within news and everything that's happening within worldwide news, local news, or economic news. The charts normally react, and you can see what's happening within the charts, and you can pretty much lay your hat on. So right now it is early Sunday morning, April the 16th, 2023. It's about 12 a.m. in the morning when I'm doing this review. This is a quarterly chart. I'm going to show you guys a quarterly and a monthly chart of each one of the major indices, and then we'll break down what's happening now. So this is a quarterly chart of the S&P 500. I want to point out a couple of things here in this quarterly chart to show you guys that you can almost pay attention to these trends, and also you can almost see in advance, I'm saying, that there was possibly a hiccup coming in the near future, even if it was years later. I want to draw attention, first of all, back to early part of, let's say 2000, when we had this little hiccup here, and we had like a bear market then from around 2000 all the way to about 2002, 2002, when we started to go back up. Notice how even from 2000, 2003, when price action fell, and this blue line, folks, represents my 20 period moving average. So that's a 20 period moving average or a 20 period SMA. So that's simple moving average, 20 period SMA, simple moving average line. And I like to use that because it gives you a sense of what's happening now, and what's it gives you a clear picture of where price action is as it relates to overall sentiment, market sentiment. 20 period moving average is a good gauge to follow. So back in 2000, I see price action almost came to a strong level of resistance, and we started to pull back. So each quarter, each one of these bars, or each one of these candles represents a full quarter. Notice how back then, from 1995 all the way up until 2000, there was space in between price action and the 20 period moving average. It wasn't a lot, but there was a little gap there. Okay, and then around 2003, price action started moving back up, managed to make it back up above its 20 period moving average. And that went from 2003 till about 2007. Again, price action is still very close to the moving average. But in 2007, we all know what happened. We had the banking crisis or whatever. And then 2007 and 2009, each quarter, we started to falter. And we eventually broke back below that 20 period moving average again in 2009. And then we started to move back up. Not too much space in between the moving average on the way back up. Now, you guys hear me preach a lot that the moving averages act, especially the 20 period, act as it's a magnet. So price action likes to be drawn back to the magnet. So from 2009 all the way up until we got about 2015, price action got a little bit away from that 20 moving average, and it lasted for a good amount. 2011 all the way up to about 2015, so several years. Then we started to pull back to the moving average. So we almost hit it here, 2016, then we marched back up. And then all of a sudden, you started to see these very wide gaps between price action and the moving average. Pretty wide here, and this is the biggest one. And when I see something like this makes me really put up my antennas. This normally spells, when you have a sharp move up like this, away from the moving average, this normally spells that eventually the steam is going to run out. This air is going to be deflated out of this balloon, and we're going to have a check back. And a lot of times you get that check back, you'll get a quick bull rally, and then a continuation of the downside. And that's what I think we're setting up for. Okay. And we got warnings, like I said, along this pathway. There were some warnings along the way that eventually this bull market was going to come to a screeching halt, and it's going to be, fooling a lot of folks and set folks up for some failure if you don't really pay attention to what the charts are telling us. Look down at the full stochastics. So in around 2018, we dipped out of the overbought territory, and which is this big red candle here, and screeched back higher for for a couple quarters, for a couple years. And then 2020, we had this big debacle back to the 20-period moving average, and we dipped a little lower. Boom. So 2018 to 2020, and now look where we're at now. Like we're about to create another lower low in the full stochastics. We haven't gotten there yet, and look what's happening now. Full stochastics oscillators starting to hinge back lower. Okay, so even with what we've seen over the past couple months, this little rally for a couple quarters in a row was not enough to say that we're out of the woods as far as the bear market. The bear market is still on, folks. Look at the take a look down here at the so this is down here, this Williams percentage, folks. This is Williams percentage. Look at the full stochastics. And we got a crossover telling us that we were possibly heading lower. And you see a lower low here. So this low is a little bit higher. So this low is lower than that low. That's what I'm trying to tell you. And we dipped out of the overbought territory. And not only did we dip out of overbought territory, but we failed to really create a strong move up in this quarterly chart on the full stochastics oscillators. And look at the oscillators in the Williams percentage. It's still trending lower, even with this little bounce that we held off the 20-period moving average. So I do believe that as we head into the summer months, that eventually we're going to see this peter out and possibly start to turn back lower, because the oscillators are telling us that it has not really shifted back into a bull state yet, back into a bullish narrative. The oscillators have not turned up in a strong way, which is what you would see in such a strong rally that was signaling a new bull market. We don't see that. And again, look at the CCI. CCI has never really crossed over with a strong buy signal. It's still trending lower. It's still rolling over. CCI is still rolling over, even with price trying to bounce off of that 20-period moving average on a quarterly chart. So I wanted to point that out there, folks. Again, we have not been able to, make a strong move back up towards these highs of early part of 2022. We're just making a little run, little bear market, a bear market rally. And folks, you got to understand that whenever there's a bear market, we don't go straight down in a straight line. And normally some of the biggest rallies happen in bear markets. Got a strong rally here. So I wanted to point that out. And then let's take a look at a monthly chart as well. Here's a monthly chart. So you might have some look in here, see some conflicting signals, but I want to pay very close attention to the 20-period moving average. Look what's happening. 20-period moving average on this monthly chart. Let me see if I can okay. So normally when on this monthly chart, when you see a dip below the 20-period moving average. And then we see price action trying its way to make it back up. It really hasn't really done anything great until it makes a huge run, a huge bounce back up above that 20-period moving average, such as here. Okay. We get a sustainable bounce where we can see price action bounce back above the 20-period moving average and hold it. And we see the 20-period moving average not doing one of these numbers, and instead doing one of these numbers. Then we got something to talk about, but that's not what's happening with this monthly chart. Look at price action. It's getting stuck right around this moving average, and the moving average is still bending lower. It's not turning up, which is what you want to see in a bull market. This moving average, this 20-period moving average, is still curling downward, with price action running into the ceiling and having a hard time breaking above it. Even though you have oscillators in the wins percentage pointing higher, CCI pointing higher, stochastics pointing higher, but price action on this monthly chart is telling you something totally different. Pay attention to the candles and pay attention to this moving average line. If we don't break above this movement, this 20-period moving average, eventually the oscillators and the full stochastics, wins percentage, CCI are going to start to turn lower as well. You see what happened back here in 2008 when price action stayed stagnant around this 20-period moving average for over a year. And then eventually price broke well below this 20-period moving average and went much lower. And here you see when we pull back in 2020, 2021, 2022, below the 20-period moving average, you see price action ricochet right back, but look where it stopped. It stopped at this 20-period moving average, and look where we've been at. We've been stuck for several months around that 20-period moving average. Let me so look how we made it back up to this 20-period moving average, and pretty much it's really done much of nothing. So we pull back, bounce back up towards the 20-period moving average, but then for about 1, 2, 3, 4, 5, 6 months in a row, we've been pretty much in a trading range. For the past 6 months, we've been pretty much in a trading range. So what happens now? Well, time will tell, but it's telling me right now that the price action is struggling to break above that 20-period moving average in a meaningful way, and struggling to get the 20-period moving average to curl up instead of continuing to look like it wants to bend downward. Okay, so we could be at a major turning point, folks, and it could be happening any day now. You know what I'm saying? I know folks has been paying attention to this bullish movement, you know, over the past month or so, but we really haven't made any major headway. This S&P will need to see a rally at least back up to this wick here, which is about 4,300, and a continuation, and the 20-period moving average turning up before the bulls can make any major noise. So unless we see a big move up to 4,300, and unless we see this 20-period moving average curling up along with the move to 4,300, then there's going to be a time coming soon, more than likely, that the bulls probably going to fade right at this 20-period moving average, and we're going to probably start to see it move down. So pay close attention to that in the S&P. So I wanted to spend some time there to show you guys what the price action is really showing us on these longer term charts. Now, just for the sake of it, if we look at the Dow Jones, we're going to see the same thing. Here's our Dow Jones. Price action back up to this 20-period moving average. And what's happening? A tight range. A tight range for 1, 2, 3, 4, 5. The past 6 months, a tight range. So when do we break out of this tight range? Could it be this summer? That is a huge possibility, folks. Price action is continuing to make it back up to this 20-period moving average and continues to stall there. So could we be on our way to break back below this level, that is a huge possibility. Okay, there's nothing going on within this world, within our economy, that's screaming a lot of positivity to make me believe that this bear market is over. You guys excuse my dog in the background, but I want to get through this. So excuse that, and we're going to look right into our NASDAQ. NASDAQ monthly chart, same scenario. And that's even more telling. Look at the 20 per moving average here on this monthly chart. Price action breaks below the 20 per moving average, tries to make a base, tries to go back up and tries to break above the 20 per moving average, but the 20 per moving average is not budging. It is still curling lower. With price action right back to its 20 per moving average. And the 20 per moving average is not curling up, it's continuing to curl down. So that leads me to believe that we're about to run into some major resistance and we're about to get that clear rejection lower. Okay. Stay about 1 second, folks. Trying to tame my partner just a little bit, but she ain't paying me no mind. But anyway, so you guys see where we are with that NASDAQ now. Same scenario. If you take a look at a quarterly chart in the NASDAQ, you see how same thing, we're hovering right around this 20 per moving average. Look at the oscillators and the full stochastics. It's still trending lower. Hasn't really made a huge move to go back up. Look at the oscillators within the wins percentage. Still in a downtrend. Like it's about to hinge and go lower. It's like right here wants to hinge and go lower. Full stochastics, I'm sorry, CCI rolling over. So nothing has changed in the quarterly chart, even to make me think that this bear market is over. So this bear market is not ended, folks. We're still in this bear market. We're just experiencing a longer term bear market rally, which sometimes in bear markets, you have strong rallies, and it's something that you got to understand. So don't store all your eggs in one basket thinking that, we're in a new bull market, because that's when folks get trapped. And I think that's what the bulls are trying to do. The bears are trying to trap the bulls and then spill heavily to the downside. And that's what happens when we see these rallies like this. Normally, once we run into a strong level of resistance, it's met by fierce selling. And that fierce selling could be right around the corner. That's our NASDAQ. We took a look at the Dow Jones. I believe we took a look at Dow Jones already. Yep. And now let's take a look at the Russell. All right, Russell, same scenario. Here's our monthly chart of the Russell. And it's been the weakest link of the bunch. And it's really been struggling even to, contend with this 20 per moving average. And look how devastating this Russell looks compared to the others. This 20 per moving average is really hitting Russell in a big way, and it's keeping it compressed in a major way. Every time it's hit that 20 per moving average, it's just took a dive. Holding a level of support down here, but that looks like it's about to be broken soon. So again, 20 per moving average still curling over. Price action is acting as, 20 per moving average is acting as a strong level of resistance on this monthly chart, and it's keeping price rejected below it, keeping price compressed below it, and refusing price to be able to make that rally above the 20 per moving average. So it's rejecting it and declining its move above the 20 per moving average every time. The monthly chart, you see the wins percentage is in a downtrend. Oscillators are still trending down on this quarterly chart. And the wins percentage downward in a major way. Oscillators and the full stochastics trending downward, and CCI all trending downward. Nothing bullish about this narrative at all. And let's take a look at the VIX. Here's our VIX. One thing I want to point out with our VIX, folks, is that it's at an extreme level. And every time we have been so low in the VIX, I'm looking at this on a weekly and a quarterly to show you guys. Every time we've gotten this range since beginning of 2022, since the beginning of 2022, when we have gotten this low in the VIX, it was normally preceded by a strong bounce, especially if we get this low. We got really low here back in around November, December 2021, and we got a really strong bounce. So could we be in store for the same thing here? Could the VIX go a little bit lower than where it is? It could. But if it goes low, I'm telling you, the lower the VIX go, the sharper the bounce is going to be on the VIX, which means the sharper the drop will be on a major market. So keep that in mind. The VIX drops much lower, but I've still been in the bear market. Okay, we're not out of the bear market. So if the VIX comes down a little bit lower, drops around 17 or just a little below 17, we could be in store for a major bounce like we've seen back, major bounce in the VIX like we've seen back in the end of 2021. Major bounce like we've seen beginning of 2022, or even a bigger bounce like the one we've seen. And this is what I believe we're going to eventually see. Let me go back to that one. Like the one we've seen here in, let's see, 2020. So we could be in store for a bounce like we've seen here in 2020, folks. We could be in store for a huge bounce such as that. So I think the VIX is definitely at an extreme oversold level. And even on the quarterly chart, it shows you that we had an extreme oversold level. And anytime we get this extreme, normally it's meant by a fierce bounce to the upside. So for all you longs and you bulls in the market, be mindful, be careful, be vigilant, and stay focused. Stay focused. And remember, we're still in the bear market. So don't get trapped up thinking that this bull market is over and you're ready to start pressing your longs. You may get caught up in a whirlwind of a move lower in the overall market. I think that's all I wanted to share tonight. Like I said, we are still at a point where we could see a little bit more downward movement in the VIX. But we could start to bounce here immediately. Look how oversold we are on the daily chart of the VIX. CCI is as low as it was back in January. Almost down as low as we were back in January. Looking at the CCI down here. So we got extremely low back in January, and we're almost back to those levels now. So keep that in mind. And when we get this low, normally there's a sign that we're in store for some kind of bounce. So keep that in mind, folks. We are extreme low levels on the VIX. So it would not surprise me to start to see a huge bounce next week because we're still in a bear market. So hopefully this is something that you guys can use, and I will catch you guys on the videos next week. Enjoy the rest of your weekend.